Report the 4th of July 2025. So, what's in store for us today? Oops, what is that? Right, today I want to discuss about how stablecoins could boost the price of Ethereum. Now, Ethereum is no longer just a tool for running decentralized apps. According to top investor Tom Lee, Ethereum is now becoming the foundation of a growing digital dollar economy. Now, this is because many stablecoins like the USDT and the USDC are built on Ethereum. Now, these stablecoins are becoming popular not just among crypto users, but also banks, businesses, and even government-backed projects. Now, let's break this down in simple terms. Now, stablecoins are cryptocurrencies tied to a real-world currency like the US dollar. They don't change much in value, which makes them ideal for payments and savings. Every time someone uses stablecoins on the Ethereum network, they pay small fees using ETH. This means that as more people use stablecoins, demand for Ethereum rises, right? So here's how this affects Ethereum price and what could happen in the future. Number one, why stablecoin growth affects Ethereum. Now, Ethereum is like a toll road. Every time someone stands stablecoins on it, they pay a small toll using ETH. Today, more than half of all stablecoins live on Ethereum. Transactions involving stablecoins already account for about 30 to 60% of Ethereum's network fees. Now, the Fundstrat co-founder Tom Lee believes that if stablecoins grow from the current 250 billion to 2 trillion in total supply, Ethereum's fee revenue could grow 10 times larger. That means more ETH being used and burned, reducing supply and potentially increasing prices. Now imagine this. If Ethereum currently earns 4 billion a year from gas fees, mostly from stablecoins, a 10-time increase means 40 billion in fees because Ethereum burns some of this ETH during transaction. A big rise in usage lowers ETH supply over time while demand increases. This is a recipe for higher prices. Okay? Now, not everything is without risk. So this is where things get risky. First of all, not all growth is guaranteed to help Ethereum. Stablecoins can move to other blockchains. In fact, many already exist on Solana, Tron, and Binance Smart Chain. Now, these chains often have cheaper fees which attract users. Tron, for example, has more stablecoin users than Ethereum right now. There's another concern. A new kind of stablecoin called Ethena or USDE is built in a way that uses ETH as collateral but also short sells ETH, which means bets that ETH will go down to keep its value stable. The more people use this kind of stablecoin, the more short selling pressure builds against ETH. This could stop Ethereum's price from rising quickly even if usage increases. All right. However, though they are things that could actually help the ETH environment in general. So that comes to liquidity and money flow into Ethereum. Now, even with those risks, stablecoins still increase the amount of money moving through Ethereum. This extra liquidity supports DeFi projects, apps, and even businesses. More activity means more demand for ETH to pay fees and secure the network. When people hold stablecoins like USDC on Ethereum, they often use ETH to interact with other apps for actions like borrowing, lending, investing. Now, this ecosystem becomes stronger the more stable coins are used, right? And not only that, stable coins like USDT and USDC are backed by the US Treasury bonds. That means the money people use to buy these stable coins end up going into the US government debt. And that is a way the US government is indirectly helping, right? So the US government supports this because it brings more demand for US dollars in digital form. Instead of sitting idle in bank accounts, global money now flows into stablecoins which mostly operate on Ethereum. In simple terms, Ethereum is helping digitize the dollar. This gives a key role in the future of finance, and that attracts serious attention and investments. Now, JPMorgan recently launched a blockchain-based payment system using a token called JPMD. It runs on Base, a layer 2 chain connected to Ethereum. This means large banks are starting to move real money through Ethereum-style systems. Visa also tested settling payments in USDC on Ethereum and is expanding its blockchain pilot worldwide. If this continues, Ethereum could become the digital highway for billions of dollars in daily transaction, just like how the internet became the highway for information. So with all this, what could Ethereum be worth? Now let us try estimate, right? Now the current market cap is about $400 billion. In the last 8 months, Ethereum traded between 1,003 and 4,000, right? Now, imagine stablecoins reach $2 trillion as what Tom Lee predicted. Now, if most of this is on Ethereum and the network earns 10 times more fees, it could earn 40 billion yearly, right? Because early on, Ethereum already is mentioned that they're already making 4 billion. Right now, if it's 10 times, that's 40 billion. So if Ethereum is valued like a tech stock at 25 times earnings multiples, then 40 billion times 25 equals to 1 trillion market cap. So if supply remains close to 120 million ETH, where it is right now, so you get 1 trillion divided by 120 million, we are talking about 8,333 US dollars per ETH. Now this is a conservative estimate, right? Because this is what based on the Tom Lee's projections. I'm using that as a calculation. But if Ethereum becomes the backbone for global payments, asset trading, and stablecoin finance, it might be valued like Apple or Google. So let's test this idea. Okay, let's say Ethereum reaches a 10 trillion market cap, which is roughly 10% of global finance, right? So just take 10 trillion, divide by 120 million, we are talking about 83,333 per Ethereum. That may sound crazy, right? But if Ethereum becomes the platform for a digital financial system, hosting not just stablecoins, but tokenized stocks, bonds, loans, and payments, this scenario isn't impossible. Because we have seen that with JPMorgan already, and Visa is doing it. So there is this possibility, but let's not look far. Let's not look far. Just based on Tom Lee's prediction of 10 times earnings, all right? With this $2 trillion movement in stablecoin, yeah, this still represents a very, very nice return, right? So as a conclusion, stablecoins are growing fast, and Ethereum is at the center of it. Every transaction, every dollar minted or moved using stablecoins on Ethereum increases the demand for ETH. While there are risks like cross-chain competition and new designs like Ethena that may put pressure on ETH, the overall trend is clear. Ethereum could become the digital infrastructure for the next financial era. If that happens, it might be worth far more than it is today. So whatever it is, monitor the developments, okay? Now, all these prices can only fall through if and only if the assumption that the movements of stable coins is on the Ethereum platform, right? But if it doesn't, you know that whatever calculations or projections, that's not going to work, okay? What I gave you is a possibility that could happen if most of the transactions on the stablecoin happens on the Ethereum platform, right? Okay, so with that, that's a report for today.